Welcome to Tax Teach. I hope you're all having a great day. My name's Sean. I'm a certified public accountant specializing in taxation. Today, I want to go over 3 ways to make money tax-free. Now, there are more than 3 ways to make money tax-free, but I wanted to go over 3 common ways that you might find to make money tax-free. So let's get into the first way to make money tax-free. The first way to make money tax-free is really 2 components. One is through long-term capital gains, and second is through qualified dividends. First, I'll go over long-term capital gains. Now, long-term capital gain is when you have an asset you've owned it for over a year and you sell it for a gain. By gain, I mean you sold the asset for more than what you bought it for. I'm not going to go over depreciable assets because that's a whole different calculation itself. I just wanted to keep this simple for now. And it's like, assume you have a stock, you bought it for like $10, you own it for over a year, then you sell it for $20. That $10 difference would be your long-term capital gain. Now, if your taxable income is under $41,600, that long-term capital gain is taxed at a 0% rate. So keep that in mind. If your taxable income as a single filer is under $41,600, if you made long-term capital gains throughout the year, it gets taxed at a 0% rate. Now, if you're married filing jointly, the total amount of taxable income you can have to have a 0% rate on long-term capital gains is around $83,300. A table should be popping up now, showing the taxable income amounts and the long-term capital gain rates that correspond with those amounts. So that's the first component of making money tax-free is having long-term capital gains, so selling stock for gains. Now I'm going to go over the second component of the first way to make money tax-free, which is through qualified dividends. With qualified dividends, I think the first thing I want to do is explain what a dividend is. When you own part of a corporation and that corporation makes money throughout the year, sometimes they will give the money that they make back to their shareholders. And when you are investing in the stock market, right, investing in these stocks, you technically are a small percentage owner of the company that you buy the stock from. So what a qualified dividend is if you own a stock for a certain amount of time, and a description should be popping up now going into more detail how long you own that stock for to be considered a qualified dividend stock. When you own a stock for that amount of time and receive a dividend, that dividend is taxable but at preferred or preferential tax rates, similar to the long-term capital gains, where if you make under $41,600 if you're single, or if you're married filing jointly around $83,300, you're at a 0% tax rate. Now you might be thinking, why are these types of income, like the long-term capital gains and qualified dividends, being taxed at these different rates? And it's all about the government trying to incentivize certain kinds of activities. Now what the government is trying to do is have their taxpayers put money into the economy through buying assets, and whether that be stocks or other kinds of assets, to put money back into the economy. And so that's what the whole reasoning is for these preferential rates instead of the normal tax rates, is to incentivize the taxpayer to put money back into the economy. So now that I've gone over the first way to make money tax-free through those 2 components, that long-term capital gains and or qualified dividends, now I'm going to talk about the second way to make money tax-free. The second way to make money tax-free is through investing in municipal bonds. Once again, I think it's helpful if I describe what a municipal bond is, what the definition of the subject is. A municipal bond is when a local, like a city, a state, kind of a municipality, has a project, whether it is to build infrastructure, parks, bridges, roads, whatnot, or other kind of programs. The city needs money for that, and so they create these loans with organizations, and so you can invest in these loans, these municipality loans, these bonds, and you get interest on the money that you invest into those bonds, tax-free interest. And so that's a way you can make money and you can do this through your brokerage account, TD Ameritrade, Merrill Lynch, all these other brokerage accounts. You can invest directly for municipal bonds. You can talk to a financial advisor if you have one, ask them about municipal bonds. They can invest that for you through like index funds or mutual funds. Just keep in mind that these municipal bonds, the interest you make on them are tax-free, and something to consider when you're investing to have a tax diversification in your portfolio. So yeah, number two to make money is through buying municipal bonds that give you that tax-free um, interest. Typically for your federal return, sometimes even if you have a state return, you'll get tax-free on that. It just depends on the state you're living in. But just keep that in mind as you invest this year. The third way to make money tax-free is through investing through a Roth IRA account. I have a video going over what a Roth IRA is more in depth. An icon should be popping up now. So feel free to click that video and watch that as well. It goes more in depth about the Roth IRA. I'll give a brief description of what it is. It's an investment account. So you put money into it and then you invest. And when you invest that money, it grows tax-free. And when you take that out during retirement, that money is tax-free as well. Now, the downside to a Roth IRA is it takes around 59, you have to be 59 and a half years old to take that money out without there being any penalties. If you take money out before you're 59 and a half years old, under most circumstances, you're going to have a penalty on that amount. Also, you have to have the Roth IRA open for 5 years. So you have to be 59 and a half years old and have that account aged at 5 years. So that is the Roth IRA. It's an investment account, and you can put your money in, have it grow, make money, and have that be tax-free. Those are the three ways you can make money tax-free that I wanted to talk about. And just to recap what those are, one is long-term capital gains and qualified dividends, making that money tax-free depending on your taxable income amount. Two is investing into municipal bonds, getting that tax-free interest. And three is through a Roth IRA account, an investing account, and making money tax-free and taking that money out later on in life and having that be tax-free. And like I mentioned earlier, there is other ways to make money tax-free. I just wanted to go over these items because they are very common and I wanted you all to be aware of them. That concludes the video. Thank you all for watching. I hope you found this video helpful and informative. If you liked the video, hit the like button. It lets me know that you enjoyed the content I created in this video. If you want to watch things like this in the future, hit the subscribe button. It's free and it keeps you up to date on videos that I create. Once again, thank you for watching, and I'll see you all next video.